Yo, it's your boy Colin, aka Colin Trades CSP, back with you with another video. Today's video, we're going to be discussing and going over Opendoor Technologies earnings report. As you guys are aware, Opendoor just reported earnings this past Tuesday after hours, and a lot of people have got mixed ideas on what is happening at Opendoor, negative, positive, and so forth. Today I'm going to basically discuss what happened during the earnings, but also I'm going to discuss the reason why I am still overall bullish, even though what people are saying in the overall market is completely bearish. First of all, what Opendoor does, they're an iBuyer company. They basically buy or purchase people's homes that sell to them, which then they sometimes renovate and or flip the properties for profit. That is the simplest way possible when it comes to understanding on what Opendoor Technologies does. They basically buy and sell. As you guys are aware, and what looking at this chart is, people think that Opendoor Technologies is going under or basically losing money. As you can see with the chart, the revenue growth from 2022 has basically plummeted since then. But one thing you got to understand when it comes to looking at this chart is that 2022 was coming off 2020's COVID 0% inflation rate. So people were able to borrow money at 0%, causing prices to go up exponentially, and people were just purchasing homes and trying to sell them for profit. So of course these numbers were going to look extremely skewed just to the fact because everyone was buying and selling properties during that time. And as you can see, as the overall market interest rates were increasing in 2023, 2024, and going into 2025, things started to slow down when it comes to buying and selling properties. And as of right now, it looks like everything has completely stalled. But for Opendoor, you can see 2025, 2026 revenue is starting to pick up again. So this is one of the bigger things that I am bullish completely on Opendoor Technologies. As revenue increases, even with the current overall macro environment with interest rates at its highest levels, the Fed is thoughts of raising interest rates. Opendoor Technologies is still able to show up every single day, allowing them to increase revenue and lower their expenses. So the turnaround story is still intact. The next thing is EBITDA growth. So basically, EBITDA has been, of course, like I said, their net loss over the past couple years. A lot of the things coming down when it comes to the previous ownership, that being Opendoor Technologies 1.0. Their marketing when it comes to acquisition cost per home was extremely high and driving the company under. As you can see in 2023 with a negative $627 million, 2024 minus 142. So the trajectory was going down. Now it's about the turnaround story. You know, that's what Kaz was basically preaching, is that Opendoor Technologies can be a profitable company. Everybody keeps looking at the stock price, not knowing exactly what they're doing when it comes to the overall business. With increased margins over their target staying within 5 to 7%, and allowing them to stay profitable with the houses they are buying and selling them for a profit. This is a key success story for a turnaround. And that's one of the other reasons why I remain bullish for this company. So, of course, there's a lot of risks involved when it comes to companies like this. And something you need to keep an eye on is what are the catalysts to allow for this company to continue to run. The main thing is basically the Fed rate cuts. As of right now, today is August 7th or 8th, and the Fed were thoughts of potential hikes. But this past Friday, as you can see it in the jobs reports, there's no reason to increase rates. As employment rate continues to remain stable, the market continues to remain stable, and CPI becomes basically as in line and if not below what is basically expected. So this allows for the Fed to basically continue to pause as the inflation basically continues to remain stable throughout its tenure. So one thing that remains bullish and possibly in the 2027 horizon is maybe a potential rate cut. This will be very, very key metric when it comes to our key catalyst for Opendoor Technologies for 2027, allowing for the macro environment to basically catch up and people to be interested in buying homes in the near future. So again, I mentioned interested, not basically forced or forcing to buy essentially. So that is one thing that I'm excited for. And then as you guys are aware, they're building an AI infrastructure when it comes to making it easy for them to purchase homes. So they're using AI technology to basically purchase homes, which then allowing the process of yourself and myself to purchase home at a quicker rate. As of right now, people are using real estate agents, taking a lot more than 14 to 30 days to purchase the home, whereas they're building infrastructure to where AI is allowing them to process homes a lot quicker. So people are allowed to get their homes a lot faster. So that makes it a lot easier for people to purchase homes. So another thing is that they're building partnerships. As you guys are aware, we're working with Lennar. Lennar company is projected to sell over 83,000 homes in the year of 2026 and look to purchase more in 2027. So that is definitely a key partnership that allows for Opendoor to hit new customers and receive that revenue when it comes to buying and selling properties. And the next key metric to pay attention to for 2026, if not 2027, is the home purchases and contribution margins of those purchases when it comes to buying and selling. So as of right now, when it comes to 2026 guidance, they're about to purchase roughly around 15 to 17,000 homes with a contribution margin of 4.0 to 5.8%. Looking to target 6 to 7% in 2027. So their contribution margins when it comes to purchasing these homes are going up, and they're making money on these homes. So what is that is a key to success. Purchasing more homes, contribution margins are going higher. Average home holdings is going lower due to AI infrastructure, and gross margins will be increasing, allowing for a success story to then the earnings per share revenue is going to go higher. That is a key metric that we want to make sure that we're paying attention to going into 2027. Now, I'm not a person when it comes to giving price targets, as price targets are just numbers that don't really connect the business alone. Yes, it's nice when it comes to a stock running up 50 to 100%, but at the end of the day, what is the business doing to make money? And are they profitable? Do they have purchase power when it comes to what they buy and sell? That is a lot more things when it comes to than just a target price. But again, with the metrics that I was looking at when it comes to 2027, my bullish case is $8 to $11 with the positive EBITDA, positive contribution margins, building and scaling partnerships like Lennar, Real Scout, and other real estate companies, and overall bullish when it comes to the Fed potentially cutting interest rates. That is overall basically a level of success that could basically turn around this company in the long term. And people keep looking at the short term when it comes to all of this information. The next thing I'm gonna go, it basically is a key metric that everybody should know if they're a investor of this company, is their accountability tracker. This gets posted weekly, basically letting the investors know how much contracts they got under within that past previous week. And as you can see, since the start of the year at 146 contracts, we're now at making on a weekly basis roughly around 500 to 600 contracts a week. You start to look at the numbers right now in Q3, we're averaging roughly around 1,000 contracts a week, which right now we're sitting at roughly around 5,000 contracts in Q3 with well over 2 months left of the quarter. So projected to do well over 10,000 plus contracts just for Q3 alone, which then allows for more homes to be purchased, allows for more houses to be sold going into the end of Q3. And then you can look at more a attracted total revenue for 2027. So as you guys are aware, Opendoor, again, has been on a downfall recently, rejecting from its reasonable pop from basically July of 2025 all the way going into 1087. So now we have just basically on a complete fall. Shorts have been shorting this company from the top and have been basically profiting all this money. It is a hard thing to look at as a shareholder, but one thing you got to understand is what is going on with the company. Is the company profitable? No, but do they plan to be profitable? Yes. Is the company have positive contribution margin? Yes. So they're basically not burning cash like they are before. Are they basically raising guidance? Yes, they're increasing their guidance as they are basically able to purchase more homes, able to sell them for higher prices, and basically profiting from every house they sell. And people have to understand that, yes, the stock is falling, but sooner or later, this will turn around and Wall Street will actually understand that this company is doing better than what the market is saying. So definitely going to be keeping close eyes on this name and will continue to purchase as the stock continues to fall. So overall, like I said, now looking at the earnings report, revenue up 23% quarter over quarter, contribution profit 59% quarter over quarter, homes purchased. This is a key one because at the end of the day, homes purchased is what they'll be able to sell, up 77% quarter over quarter. Now, the next key number that you want to make sure you're paying attention to is inventory. How long is inventory being held over basically being hold so that we are being able to sell them? Percentage markets 120 days declined from 10% to 9% quarter over quarter. So you want that to slowly continue to decrease as we continue to go throughout the year. Operation expenses closed was $3,000 in the second quarter per house, down from $5,000 in Q1, $8,000 in Q2 2025. So basically the expense per house has been slowly decreasing. The marketing expense does not to be as high as it was in previous ownership. Fixed operating expense held steady, $35 million Q2 2026 compared to $33 million in Q1 2026. So basically $2 million less quarter over quarter. And like I said before, homes purchases increased 77% in the prior quarter, generating 6,908 acquisition contracts. And like I said before, the acquisition contracts right now in Q3 is roughly 5,000 contracts. Right now we're basically about a month and a half into Q3. We have another month and a half to go. So if that basically continue its run to finish off Q3, we're looking at roughly around 10,000 contracts, basically acquisition contracts in Q3 alone. That's almost double the amount what happened in Q2. If that it basically moved across the board when it comes to home purchases, homes sold and everything, and it looks to double, you're looking at basically a revenue base of roughly around double the amount of what was made in Q2 alone, which was roughly around 800 to 900 million for Q2. So you're looking at doubling that. Is bullish case is $1.6 billion just for Q2 alone. Again, that is a somewhat unrealistic number, but again, the numbers don't lie. If 5,000 acquisition costs is doubled from Q2 to Q3, you're able to double the homes sold from 2,300 to roughly around $4,000. Your revenue is going to be exponentially higher. Now, of course, contribution margins was projected to go lower, as they mentioned. It's looking to be closer to the 4 to 4.5% range for Q2, but again, that has still remained positive. Hopefully, with contribution margins staying positive with less expenses, that will allow for a potential chance for a positive EBITDA growth going into Q4 2026. So that is another reason why I am extremely bullish on this company. Now, there is a lot of red flags when it comes to things that people have been chatting about, and that being about his compensation. So as you guys are aware, that Kaz gets a compensation package for stock performance, that being if the stock gets over certain prices starting at $9, then 13, he gets a compensation for that. But also there's a lot of, you can say, employee compensation as well. So certain employees get compensated stock comp for hitting their quotas for the quarter. So that is a dilution to other shareholders, allowing for the outstanding shares to basically continue to increase. Now, that is a serious red flag for the company. If, as Kaz mentions, he doesn't plan to dilute customers and dilute shareholders, so basically not selling shares to make cash for the company. They are in a pretty good financial standpoint with $1 billion in current cash flow. So that is very good when it comes to it. But again, at the end of the day, we want to make sure that we're not diluting our shareholders and making sure that we're purchasing back stock and allowing for the company to continue to grow, allow for shareholders to reap the benefits of owning this company. And the reason why we want to continue to own this company, because we believe in the management, we believe in the company, we believe in the stock price from here on out, that it can go higher. So that is a lot of things that I want to make sure going into the next couple quarters to pay attention to. Are they continue to dilute shareholders? And is Kaz sticking to his promise when it comes to raising guidance, raising EBITDA, allowing to be cash flow positive, and it's called any adjustable net income positive. So that is definitely something I want to make sure to pay attention to going into the third quarter. I do basically talk about this a lot in my Discord, or not my Discord, on my X account. So you're more than welcome to basically hit me up if you have any questions or concerns. But there is a lot of upside when it comes to the potential company that I see. So definitely gonna be keeping an eye on this one, basically try it on a weekly basis, basically giving you an update, what happened the previous week, what I see for the company overall. So I hope you guys enjoyed this video. I hope to see basically, and I'll be looking to post more about this video, like this company, basically talking about why I believe Opendoor Technologies can soon be a well-established turnaround story, and then look to basically reap the profits of how amazing this company could be in the near future that the Wall Street's not currently looking at. I hope you guys enjoyed this video. Hit the like button, hit the subscribe button, and the bell notification. Keep posted on exactly when I look to post more videos about this company, but also in the future, more different other companies that I'm interested in looking at. I'm going to explain the details and then go about it that way. Now, of course, if you guys have stuck around for this video, you see that I look to blabber about things I might not know exactly what I'm talking about, because I'm literally a nobody talking in front of a camera. But if you guys have found information regarding this video that you might like, I'm looking to improve, get better every single day as I continue to post videos like this. So I hope you guys enjoyed. Hit the like button, hit the subscribe button, and I'll see you guys in the next one. Peace.